Hello and welcome to Pro Trader Strategies Market Commentary for Monday, September the 10th. My name is Eric Wilkinosn, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. And remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with the economic data across the pond. It being a Monday, not so much here, but we do have some stuff coming out of Great Britain. And we got GDP coming in at 0.3%, expected to be 0.2%. Manufacturing production came in at negative 0.2%, expected to be a positive 0.2%. And the trade balance is a negative 10 billion. So pretty much in line with expectations there. The one that was the big miss was the manufacturing. It wasn't a major miss, but not good seeing manufacturing production going into negative territory, especially when they were expecting a positive reading there. And then we also got industrial production out of Great Britain, came in at 0.2%, expected to be 0.3%. Over here in the United States, pretty much a nada. We got Bostic speaking later on today, and that pretty much sums it all up. On to the overall markets, crude oil moving slightly in negative territory by about 20 cents. They're right there at the point of control. Should want to calm down at least for the next couple of days, maybe until we see the inventory report on Wednesday. We got gold futures slightly in positive territory. Not a whole lot to see here other than the battle above and below the 1200 mark. It pierced below that earlier today. Back above that, treading water by about $1 some odd. The settlement was barely above 2,000, so that was a win for the overall bulls, but it was probably a little too close to comfort on that 2,000 settlement. Bitcoin volumes continues to slow down and right down near the lows of the day, right around that 6,000 mark. That's where we found support, and this is where the most time and volume, or at least the most volume's been spent. I'd say volume's pretty darn close to that as well. That's where price is accepted. It's going to really need to have some kind of news to come out to get this to snap out of this. As far as I'm concerned, it just feels like it's dying on the vine. Bonds moving slightly higher by about 7 ticks on the day. Pretty much waiting for Bostic to speak. That's the only thing that's really going to drive this market today, I think. And as of right now, the markets are pretty much priced in, at least in the bonds, for a gradual increase in interest rates. We're already priced in for that, so not a whole lot to see there. VIX coming off today as the broader equities are really starting to claw their way into positive territory. We started out the day in negative territory. As you can see, we are slightly negative right now in the Dow by about 10 points. When I was getting set up, we were just in positive territory. NASDAQ still in positive territory as we speak, up about 4 points on the day. The big line in the sand to look for is the 6-1 Fibonacci level. We settled below that, came down, tested the 50-day moving average, almost tested it again today. One could argue that we went down there to test it and rallied up and away, but the big settlement's going to be above 74.44. We are just slightly below that right now. That's that 61 Fibonacci level. So the bulls are going to want to get above that. Bears are going to fight to try and keep below right now. With no economic data today, it could go really either way. That E-mini S&P is up about 4 points on the day, maybe 5 points, and again coinciding with the 2877. We are above that right now. That's the E-mini S&P's 61 Fibonacci level. Above that, bulls are winning. Below that, we could probably continue to see this sell off at least to the value area high, which lines up with that 50-day moving average. I don't really expect a whole lot out of this market today. May have a little bit of a battle to settle above this area, but it's looking a little bearish to me on the overall equities right now, just with the volume, the way that the market's set up on the technicals. Not a whole lot going for it right now. E-mini S&Ps did get short on the overnight inventory, and then on the opening we kind of flushed those guys out. Actually, sorry about that. We were long overnight inventory and flushed out on the opening. We flushed those longs out. then got a bit of a bounce, now starting to continue back down towards those lows. All right, so now that the overnight inventory is kind of neutralized, this market really could go either way. I would be leaning towards the downside in this. I have long SPY calls in my trading account. I'm looking to cover those. It's just not really getting the follow through I expected from the onset of that trade, and looking to just pull the ripcord on it because I don't think it's really going to work out for me. All right, then a couple of trades that I've taken off, or are looking to take off, I should say, with TLT. I put on this trade for the downside. Remember when we were rallying, I said, hey, this market really cannot go any higher. It's time to add some short deltas to my portfolio in TLT, trying to stay mechanical and hedging your portfolio in the bond area. So that's what I've been talking about, bond portfolio protection, for I don't know how long. And this was in the October. I bought the 121 puts in there for $1.50, and I covered those for $2.38 this morning. Chased them a little bit on this rally. As you can see, the market was moving higher. Thought I had a better chance earlier this morning, but started chasing those to get out because that was a quarter 25% increase in my trade. So I bought it for $1.50, 75 cents, maybe 50 cents. 50% increase in that gets me out at $3.25, so slightly better than that. Similarly, in Apple, it's right there at my 50% increase in this trade with Apple. I put on some long puts in here as well, and they have come in line with what I was expecting and looking to get out of it for slightly better than a 50% increase in my trade there. And I went into the November, sold the 215 puts in there for $5.50. So if I get like a 50% increase in there, that's somewhere around $2 and let's call it 75 cents. Add that $2.75, that gets me out at $7.75, and we are trading right around $8 plus. I'm trying to get out for $9. That was on the open when we were near the low. I probably could have gotten a chance to get out of that. It's gone up and away for me now. Now that I'm seeing the overall equities kind of roll over, I started looking to chase this trade. But now that the equities are starting to show a little bit of bearishness, maybe to the downside, I'm going to hold on to Apple at that $9 price range and hopefully be able to get out of there sometime today. That would be over and above what I expected for that trade. But most likely looking to get out of that sometime today too. All right, that's it for today. Friday's webinar is going to be a great one. We're going to start a whole new chapter on the series of volatility. I've been talking a lot about volatility recently, and volatility is one of the main factors in determining what kind of strategy we are going to do. Kind of like this Apple trade. I've got long puts on. That's because volatility was really low. I knew if the market started rolling over, that volatility will help with my directional trade as well. Directional right and volatility moving higher, that will help those premiums inflate and get me out of my trade quicker. So that's what we're going to be talking about almost extensively through this volatility series, determining what strategies are right for what type of volatility we are experiencing. So check that one out at protraderstrategies.com. And if you can't take that, take it easy.